The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Hello and welcome to the Monday night property edition of Your Money, Your Call. I'm Lisa Montgomery, and if you're watching tonight, it's likely that you're interested in property and property investing. So, as usual, we'll be taking your calls and answering your emails on that very subject. We've got a great show for you this evening, so make sure that you stay tuned and hopefully we'll be able to assist you if you're beginning or continuing your property investing journey. Now, there are two ways you can get in on the conversation tonight, and you can simply call us on 1300 30 34 35 and speak with us, or send us an email at property@skynews.com.au. Now let's start the program with the news of the week, and according to the finder.com.au monthly Reserve Bank survey released over the weekend, 28 leading experts unanimously expected no change to the official cash rate at the RBA meeting tomorrow. However, all respondents forecast a rate rise next year, with many betting on a gradual interest rate upwards cycle for the next 3 years. For the first time, finder.com.au has released a forecast of when the cash rate is likely to rise, and according to the when the cash rate is going to be rising in June 2015. Michelle Hutchison, money expert at finder.com.au, has said that she expects that the interest rates will rise during that quarter, and many of her respondents have said that that will be the case. She also cautioned that if borrowers are looking to take a mortgage out right now, or indeed if they've got one in recent months, that they should make sure that they can make those repayments during the next couple of years. Now, joining me this evening, we have tonight Charles Tarbey from Century 21 Real Estate, and we have Irene Riddel from BMT Tax Depreciation. So if you would like to call us and ask us a question on anything property, finance or depreciation, all you need to do is to call us on 1300 30 34 35, or indeed email us at property@skynews.com.au. Now, welcome to you both.
Thanks, Lisa.
It's been interesting, hasn't it, that we've looked at some of these predictions on interest rates over the last, many months. I mean, we've been sitting here, guys, for the last 2 years waiting for interest rates to come out of this period of stability, but they haven't. We've been living in a beautiful time of stability for borrowers, and now we're sort of starting to hear murmurings that interest rates will actually increase into the first quarter and the second quarter of 2015. What's your view, Charles? Are the 28 respondents to the finder.com survey right?
I think so with regards to interest rates now, but I also think there's a lot of talk out there right now because the RBA is concerned about what might happen in the marketplace due to investors coming in and moving things, shifting things, price rises, certain talk of bubbles right around the country, or
yes,
mostly in Sydney and Melbourne. So I would expect that the talk would be now, the rhetoric would be that the interest rates are going to rise in the coming year. It's just something that you really would expect. Now, I don't know whether we have the opportunity to say that correctly, because something could happen overseas that could change everything. But I think it's good talk right now. I think it's the best talk.
Absolutely. What do you think, Irene? And welcome. This is your first time on the show with us tonight.
Thank you, Lisa.
What are your thoughts about what's going to happen with rates?
Definitely, as Charles summed up, I think it may be something that we could see over the next year. It is all speculation, of course, as the market does tend to change. There might be something that comes up and that may affect it. Potentially they might want it to stay or increase slightly in the future as well.
Yeah, no, I agree with you. Well, the RBA meet tomorrow, and it's a bit of a non-event for for borrowers, I think. And you know, we've enjoyed these interest rates now for so long, and I don't.
Interesting to see what the notes are at the end of it all, and that's what everybody's going to study, and the underlying current of the comments that they make.
What's that language going to look like?
Yeah.
Because it's been quite benign in the last, well, in fact, most of the last 3 or 4 statements have really mirrored each other, apart from just a couple of lines in the RBA statement. So I think that we probably will expect more of the same, although I think we may see that the RBA may highlight what they call as the imbalance in the property market at the moment in terms of the favouring of investors. But I want to come to that a bit later on. But look, let's go to our first email, and it's from Siri, and he writes to us, as an investor, what do you think about body corporate fees when buying apartments? The amount per annum can be a bit high compared to purchasing a house where there is no fee. So let's just have a look at that. So there's no, this guy's looking at as whether he should buy an apartment over a house. What do you think, Charles?
Well, I guess there are fees with a home, because at the end of the day, you have to maintain that property, and the body corporate fees do that. So either you do it that way or the body corporate fees do it. But Lisa, it's really important that when you're buying an apartment, it's really important that people make sure that they look very closely at the body corporate fees and the sinking fund, because often buildings are way overpriced in certain areas because the body corporate's not running it effectively.
That's right.
And I had a property in the city of Sydney where the body corporate was exceptional, and during the economic downturn, the prices in that complex held their value when others dropped, because everybody knew how strong the body corporate was.
Yes, that's right. That's right. Now, I know that you work a lot in depreciation. Well, that's what BMT does, Irene. What's your advice to Siri?
Well, first of all, I'd probably mention that you shouldn't really be making a decision on purchasing an apartment simply because of the body corporate fees. That being said, the reason why body corporate fees might be more expensive in some situations is that there are more common area assets. So there might be pools, there might be gyms, there may be lifts in that situation. And you own a portion of that, essentially, in every state where you invest. So the tax office will actually allow for you to claim depreciation on your percentage of ownership of those assets, as well as a loss at tax time. So similar to when you purchase a house, you have maintenance. The whole purpose of a body corporate fee is to maintain that property now and in the future. And you want to be maintaining that because in the future, your property is going to be worth a particular value to somebody else. They may want to purchase a property in a development that has all of those other amenities, and it therefore be worth more to them. And they may purchase that for a lot more than a property that didn't really have as much common areas. But for you, over the time of ownership, you may have only paid a smaller amount to upkeep it.
No, that's right. You shouldn't be making a decision on whether, you know, if there's a fee involved as a body corporate fee over not having a fee. And I think it really does. It matters as to what is popular in that area. In the area that you're looking to buy, are units more popular? Are people coming to that area to live in a unit, or are they actually coming to the area to live in a house? So, you know, the type of growth you're going to get, the long-term yield that you're going to get, all of those factors really are built around whether people are going to want to rent the property that you're purchasing or not. And if there's a fee that's actually attached to that, well, then that might be just something that goes along with that purchase.
Some of the fees can be extraordinary because of the way it's run, but I'd rather have a bad body corporate than no body corporate at all.
Yeah, I agree with you. All right, sorry, go ahead.
Sorry, no, I was just going to say that if people are really concerned about the exorbitant price of the body corporate fees before they even purchase a property, they could get their solicitor to do some searching, sort of see what repairs have been done in the past, if there is a sinking fund, how much money is in the sinking fund, and then also other issues that may arise in the future, and if it is running properly.
Excellent. Some good suggestions there for Siri. Well, we have to take a short break, but stay with us. Tonight, as usual, we'll be giving away one of Margaret's books to the question deemed to be the most deserving of the night. And tonight, we'll be giving away Margaret's new book, How to Achieve Property Success. In this book, Margaret takes the very best from her first 3 books with updated information and new content, resulting in a one-stop shop for property investors. And if you would like to get your hands on this free copy, all you need to do is call us on 1300 34 35 or call us or email us at property@skynews.com.au with your question. But make sure you're watching until the end of the show to see if you're the lucky winner. We're off to that break. We'll be right back. Welcome back to the Monday night property edition of Your Money, Your Call. I'm Lisa Montgomery, and tonight we're taking your questions and providing some answers to help you get ahead with your property investing. With me this evening is Charles Tarbey from Century 21 Real Estate and Irene Riddel from BMT Tax Depreciation. And we would love to answer your questions, so pick up the phone and call us. The number is 1330 34 35, or of course you can also email us at property@skynews.com.au. Now we're going to go to our first caller, and it's Terry, and he's from Maitland. Are you from Maitland, Terry?
I am, but it's a she, so that's okay.
Excellent.
I just wanted, thanks again for taking my call. I love the show. I never miss it. I've got about $450,000 to invest. I've got about 10 years to retirement, so I'm looking for some capital growth. I live in New South Wales, but I'm looking in the metropolitan area of Brisbane or even the Central Coast. Those are areas I identified. Do you think that would be a good place to go, or are there any areas in New South Wales or Australia that you have identified that I get good growth for 10 years?
Is this your first investment property?
No, it's not. It's my second.
It's your second, okay.
Yeah.
And can I ask you where your first one is?
It's on the mid-north coast.
Okay. And so at $450,000 you've got to invest?
I have, yes.
Okay. I'm going to go to the panel and see what they've got to suggest for you, Terry.
Yeah, I think Terry's picked two very good areas,
yes,
the Central
I think
Coast and in the Brisbane area, because the Central Coast itself hasn't had the same growth patterns as the Sydney market yet, and it's getting there, and it's sliding its way through. Newcastle also has had fantastic growth just above it, so you're going to be able to be sandwiched in between those two. And Brisbane, of course, for a long, long time has been sitting fairly idle, fairly slow, and we've predicted that that's going to move strongly. And with $450,000, you really do have a good choice of investments.
I think so too. Irene, your thoughts?
Definitely agree. Brisbane and Central Coast, definitely two areas to watch out for. Lots of apartments, units coming up in the Brisbane area as well. Townhouses, definitely you also need to assess for that particular area, are people investing in houses? Are they investing in townhouses? How far away it is from the city? Transport issues, and basically the target of who you want to come in there and rent the property as well. But both areas, definitely, you know, seeing some sort of movement there as well at the moment.
Well, definitely that Brisbane area. I mean, it's been one of the sleepers. The lower prices attracting investors. I think we've seen some increases of just under 7% over the last year in terms of values. We're looking at some construction in that area as well, and some good opportunity as that flows through over the next 3 years. So there's some good opportunity, I think, in that Brisbane market.
There's a strong connection between Melbourne and Brisbane markets, particularly north of Brisbane.
Yes.
And the Melbourne market has been good, and there's a lot of equity gained in Melbourne. That equity now has been converted into opportunity, so people can now buy using the equity and borrow against it. So there's going to be a movement up in those coastal areas. A lot of people talk about the Gold Coast because of the Commonwealth Games.
Yes.
But it's not necessarily just the Commonwealth Games, it's just about time.
Yes, that's right.
Definitely.
Charles, before we finish off answering Terry's question, just one other point on that. She's got $450,000. Do you guys think that maybe she'd be looking at two properties with that?
I wouldn't recommend to people to do what I do. I'd probably buy 4 with that and stretch the limits. I think she's got an opportunity to do more than one property.
Of course, it depends on her risk profile and how she feels, Irene, isn't it?
Well, it's all about affordable lending, and the banks are going to say yes or no, not based on the equity and the asset, but based on the ability to repay.
That's right. So both of those areas we think are quite good for Terry to invest in. OK, Terry, we hope that helps. Now, we do have a second caller, and that's Jagdeep from Sydney. How can we help you?
Hi. First of all, I'd like to say that I'm a huge fan of this program and the advice which the experts provide. So thank you for that.
Thank you.
Part of my question has been asked by Terry already, but I'd like to expand that a little. Given that the Sydney property market has sort of appreciated so much in the past 18 months, I'd like to invest in areas such as Gosford and Wollongong. By the way, disclaimer, I have 4 properties already in Sydney, 4 investment properties. You've given me some views on Gosford already. What about Wollongong? And do you have any such other potential areas around Sydney which I can invest in?
OK, I think there's a couple of parts to that question. We're looking at Wollongong, obviously. Charles, I'll go to you first. I'll get your opinion on Wollongong, but we should also talk, I think, to that outer ring of Sydney and how it's very competitive to purchase property right now. Your thoughts on Wollongong first?
It is competitive.
It is.
From my point of view, the southern part of Sydney as well, go all the way down the coast, Illawarra, all the way down through Nowra, right through those areas. There's some magnificent properties, a lot of properties with beach views or close to the ocean. And you don't hear a lot of conversations about property down there, and that's always a good thing. It's usually when they talk about hotspots, it's already too late to buy there. So I certainly would be investing in there. I know there are major roadworks all the way down. I travelled on those roads recently to get down to a lovely little spot at Kangaroo Valley. I've got to stop talking about Kangaroo Valley. But nonetheless, it's an area that I would value very, very strongly.
Yes, I agree with you, actually. Irene, your thoughts?
Well, from a depreciation perspective, so we do the depreciation schedules for investors. So in the past, say, 18 months, we've seen an incredible increase of depreciation schedules being ordered for properties that are on the outskirts of the major metropolitan areas. So outskirts of Sydney, it's very hot at the moment. As you said, days on the market is actually really quite short. Everyone's fighting over these properties, driving the prices up, etc. So places around, you know, maybe even potentially a little bit further than that area, if they're able to, you know, do the number crunching, if they're able to afford that. And Wollongong, a great area as well. Quite a lot of new developments going in there as well that we've seen, because we do some off-the-plan properties as well. So from a depreciation perspective and what we've seen investors doing, it's exactly the markets that they're getting into.
I agree with both the points you've raised. I think one thing for Jagdeep that I think we should be thinking about is land tax. If he's got a few properties, which I think he said in, in New South Wales now, he may be wanting to look into state. Again, some good buying in the Brisbane and Brisbane surrounds, and Margaret talks about that all the time. And also other states. Melbourne in the regional areas where some of that transport infrastructure is going in, and other infrastructure. Councils are investing, you know, Geelong, Bendigo, in and around those areas. And also, really, even though that's a sleeper down there in Adelaide, I know that the South Australian property market has to, at some stage, get a kick along.
It has to. The Adelaide market has just had a situation in the last year where it's had as much stock as it needs to satisfy the buyer requirements. It's one of the very few capital cities in Australia where supply and demand have met in a comfortable area, and that's why the prices have slowed down. I talk to the agents there regularly, and they're starting to see a bit of a jump again in that marketplace, and that's affordable. That's the most important thing.
It is affordable. So let's hope that that's helped you, Jagdeep, with your decision making this evening, and you keep watching the show. You're enjoying it. Well, there's still plenty of time left, and if you have a question for the panel this evening, all you need to do is call us on 1300 30 34 35 or email us at property@skynews.com.au. We're off for a break, but don't go away. We'll be right back. Thank you for staying with us. You're watching the Monday night property edition of Your Money, Your Call. I'm Lisa Montgomery, and we've been getting through some great questions tonight and hopefully offering a few insights into how you can become a more informed property purchaser, seller or investor. If you call or email tonight, you'll be speaking with Mr. Charles Tarbey from Century 21 Real Estate and Ms. Irene Riddel from BMT Tax Depreciation. So all you need to do is pick up the phone and call us on 1300 30 34 35 or email us at property@skynews.com.au. And don't forget, you can also have a chance to win a copy of Margaret's latest book if you do. Okay, now we're going to go to an email first, and it's from Chantel, and she writes, "We are first home buyers pushed out of the Sydney market. We're a small young family with a $225,000 deposit looking for a unit around the $600,000 mark, but cannot find anything in the areas that we like. The market is too hot. We are at the point of giving up on Sydney. My question is, should we look at another Sydney, such as Newcastle or Perth, to buy an investment house to rent out and continue to rent in Sydney? We pay $565 a week in rent. Which city out of Newcastle or Perth would you recommend? And do you have any suggestions for first homeowners giving up on Sydney?" Well, it's a common problem, isn't it, really?
Definitely.
What are your thoughts, Charles?
I think more importantly, you should stay in the market. So I wouldn't be sitting there with money in the bank, especially that amount of money in the bank. I'd be very much inclined to buy where I can,
Yes.
in a good, strong capital city, and rent I just wouldn't stay out of the market. Newcastle's not a bad place. If you're comparing Newcastle to Perth, Perth is just a lot more expensive. Perth median price has risen so fast and so high, it wasn't that long ago that it was just below that of Sydney and pretty close still. So I'd probably be pushing more to the Newcastle area than I might be doing to the Perth area.
Yeah, I think I agree with you too, because, you know, we've seen some weakening of the economy in Perth as well, and, you know, some of the heat's definitely come out of that in terms of...
It's a very scary environment at the moment, and certainly in mining towns. A lot of people are in complicated positions at this point.
I think so, I agree with you. Irene, your thoughts?
Well, Chantel, I think it's definitely a logical way to get into the market. Having that money sitting there, as Charles said, investing in property, quite a lot of the time people might find that with the capital growth that they're able to obtain more money than simply saving in their bank alone. So to live in the house that you want to here in Sydney, you may have to pay $595, $600 in rent, but then you could also own a property elsewhere, and it doesn't have to be the best property on the street because you're not going to be living there, but for reasons for investment, if it's got a strong yield, you're in a good area with employment drivers, industry, and the potential for good capital, strong growth, then I think it's a really good idea.
And you're only a short distance away from the Hunter Valley too.
And the wines.
That's exactly right. Look, I think one thing that I'm seeing more of a trend of now is exactly this. First home buyers are buying their first property as an investment property. They're not buying in the area that they want to buy because they could be actually paying more than what they should be paying for the property. But what they're doing is they're saying, yes, we need to invest, we've got the money there. They're going to another market, they're making that investment and then taking advantage of the growth opportunities, which you've talked about, Irene. But also what they're doing is paying more onto the top of that loan, getting more equity so that it will open up opportunity for them.
Not every market's the same. You know, you hear about Sydney market moving, but not every part of Sydney's moving. Certain suburbs move.
That's right.
So when you invest in a property, there is a certain time that it peaks, and it doesn't always peak at the same time as other properties are peaking.
Yes.
So you can buy a property, you can sit on it, and you can move at the right time, and you can end up coming back into the marketplace you want to and buying at a later date.
Yes, well, we hope that that actually helps Chantel make her decision. Okay, now caller Vicky. Vicky's on the line. Vicky, how can we help you?
Oh, hi. We were just wondering, we're husband and I are in our early 50s. We own our own home on the mid-north coast. We have approximately 180 to 200,000 in savings and looking at buying our first investment property. We were wondering whether the Coffs Harbour area, or perhaps I know Margaret talks a lot about Deception Bay in Queensland, whether those areas would be good places to look into for probably medium to long-term capital growth for retirement.
Yes, just a quick question. Are you, where do you live now? Whereabouts do you live now?
We actually live in Coffs Harbour.
Right, okay. Let me go to the panel and we'll see what they think about those two areas.
Yeah, Vicky, Coffs Harbour is a great place. Obviously, you know that. It certainly has a great lifestyle, but if you're looking to invest, I think you probably know that Deception Bay is going to be the better one for you at this point in time. Coffs Harbour prices have stagnated for a while, but I think Deception Bay have got a little bit of upside, and I think that's where you probably should be looking.
Irene, your thoughts?
I definitely agree. Being homegrown from the mid-north coast area as well, I know and love it very well, but I do realise that in that area there is slower capital growth than in the larger metropolitan areas. So exactly what Charles said, that you may find that Deception Bay may be the way to go, but I mean, it's your own personal decision on what you want to purchase, and any property really, if you're holding on to it for the long term, you should be able to see capital growth.
Yes, absolutely. My point that I would make to Vicky would be, Vicky, please get a plan in place, put a strategy in place, understand why you're doing this and where you want to go with this property purchase and how it fits into your ultimate plan for your retirement, rather than just thinking, yes, you want to invest in property. I think that Deception Bay or looking at some of those areas that Margaret talks about, definitely, but really get it into a plan, get a strategy first before you actually go and make that decision to make that purchase. Well, the questions and the conversation have been great so far this evening, and there is still time for you to join in, so send us a question at property@skynews.com.au or call us on 1300 30 34 35. It's time for another short break. We'll be back in just a moment. Welcome back to Your Money, Your Call. I'm Lisa Montgomery, and with me in the studio tonight is Charles Tarbey from Century 21 Real Estate and Irene Riddel from BMT Tax Depreciation. And there is still some time left for you to call and ask any question about property or finance or depreciation tonight. And you can do that by dialing 1300 30 34 35 or email us at property@skynews.com.au. And we have another Vicky on the line. Vicky, you're calling. You're from New South Wales. What can we do for you?
Hi, I'm from the Nowra area on the south coast. I own my home and I'm looking to sell it. I guess my question is more directed at Charles. I've had a few agents look at it and I'm getting conflicting messages in regard to put it on for a price or to auction it. I'm looking to buy in the Blue Mountains and would also like some advice on the best area to buy in the Blue Mountains.
Okay, great. That's a perfect question for Charles tonight, Vicky.
Well, Vicky, it's important that when you do get a number of agents come out, they're all going to have a different story because they've had different successes, whether it be at auction or private treaty. The most important thing is that when you are listing and selling your property, that you make sure that you're in selecting an agent, and this is the first choice, don't select an agent that has the most for sale signs out there. A lot of people get that wrong. They think that because there's more activity, the agent's better. So first and foremost, make sure you get an agent out there that's got lots of sold signs up, because they're the ones that are actually getting results. And then when you do, look at their successes, look at their marketing strategies, and if you decide whether it's private treaty or auction, that should be determined by the area and the types of homes for sale in that area. For example, if you've got 10 homes for sale that are similar in that immediate area, then a lot of buyers are not going to put themselves under stress and go out and get pest reports, building reports, valuations done to turn up an auction when there's 9 other properties down the road that they can make an offer on. So it's really important that if there's a lot of properties for sale in your area, auction's not generally the best place to go. So in answer to your second question, I live in the Blue Mountains and Glenbrook is where I live, the lower Blue Mountains. The one problem with the Blue Mountains is that, especially when you get further down in the Blue Mountains, the number of homes for sale is very, very limited, so you're really forced to pay a higher price. But all through the Blue Mountains, provided that you buy in an area that's not close to bushfire areas right now, that's causing grief for a lot of people, and also on highway positions, because it's now going to be 4 lanes all the way through, so you're going to get a lot of noise. It's important that you look at the lifestyle, because if I'm going to go all the way to Blue Mountains to live, I'm going there for the lifestyle.
You are going there for the lifestyle. Yeah. It's a beautiful place to live. Irene, your thoughts?
Well, Blue Mountains, lovely area, definitely, and the location, it's not too far from the CBD of Sydney as well, very easy to get to the shops, etc., but still appreciate what they have there as well. I know they've got good communities, etc. Exactly. Yeah. You move there for the lifestyle, basically.
What about the agent? What about selecting an agent? And I mean, look, we talk about proper pricing and appropriate pricing, and there's been a bit in the media about that lately, about, you know, perhaps some agents not giving an accurate price to a vendor when they're approaching them. Have you seen that at all, Irene?
Well, yeah, definitely. Yes. And I would say that you'd need to talk to several different agents if you were going to be trying to narrow it down to the one that you want to work with, the one that's going to give you more advice on the market and also let you know, well, what exactly are you paying them for? What are they spending the money on in the marketing? You know, where is it going to get you? What are the added benefits of that? And you may find that the best agent for you won't necessarily be the cheapest agent either. So I think it's really important to do a bit of research. There's some excellent agents out there that can find you the perfect purchaser, and also they can find the perfect seller. So you just really do need to have that talk to them, whoever you feel with you connect with the most, but also who you trust.
That's right. Yeah. It's all about trust. Yes. What would you add to that, Charles?
Well, I didn't get the price issue with most people. Most of the complaints that are coming in now are based around that, and I really don't get that. There are so many ways a person can find out what a value of a property is nowadays. You only have to search RP data and you can get a report done. So it's very, very easy to find out. One of the biggest issues that's coming up right now is that there are certain properties where they've got too many buyers, and it sells and then the agent's underquoted, but realistically they haven't. Or a person comes along, and a number of times I've heard this, we would have paid more story. And I was talking about that in another article. If you were going to pay more, go to an auction or put your property up to auction if it's one of those unique properties, and go and pay more if you're going to be a buyer.
Yeah.
That's the important thing. Now, Brad Beer, your CEO, usually is here on a Monday night, isn't he, Reps? I'm finding you far more interesting than Brad Beer. I just wanted to make that comment.
Thank you, Charles.
Brad just sits there as though he knows everything, but gee, Irene, you're doing such a great job.
Well, you know, I'm so glad Brad's not here to hear that. He will be, there's no doubt.
I'm sure he will. I hope he
No,
does.
I'm sure he'll be talking to us about that.
Looking out for you, Brad.
Absolutely. To our next email now, and it's from David, and he writes, I have a $250,000 deposit and I'm looking at buying a 2-bedroom apartment in Rockdale to live in. Is now a time to buy, or do you think prices will drop next year? $64,000 question. I'm paying $25,000 in rent at the moment per annum. Okay, Charles, what should this chap do?
No, I don't believe there's going to be a correction in price at all. And I think that this talk of a bubble, we talked about that before, and it comes up all of the time. It's just not there. We are not in a boom. People saying the boom is over. We're not in a boom. We haven't been in a boom. There are certain parts of Australia performing, and there's a lot of parts of Australia that are not performing. So I would say Rockdale is a very safe bet, and I would suggest that if you're going to buy there, don't wait.
Well, that's strong words there from Charles Tarbey. Irene, do you agree?
Well, personally, from my perspective, I can't see that property prices will drop drastically over a 1-year period. Usually if you tend to purchase now and hold the property, it will always increase over the long term. Well, that's what we've seen in the past historically. So it all just depends on what property he finds, because if he's living in the property himself, he might find something today and it's a perfect fit, and it might be something that he's able to afford and go ahead and purchase that, and you might feel that that's the right move at that time. But if you don't find anything at the moment, don't feel the pressure that you need to actually get in there now. 12 months isn't really too much of a long time frame that the plateau or a bubble essentially to get involved with that particular time. I know a lot of people are actually panicking at the moment, thinking let's get in now, let's do this right now, and they're not actually doing the appropriate research behind investing. So it's always something that you've got to really think about before you go in and purchase. But being that it is your personal place of residence, then you can do whatever you like.
He can. And look, you know, I mean, I think that people are thinking that prices will drop next year. I don't think they're going to do that, and I think we're all in agreement. I think what we're seeing is that maybe in some areas we'll see some plateauing. You know, we'll see things sort of even out a little bit, but I don't see that we're going to see any great drop, because we have a supply and demand issue here in Sydney.
Low interest rate.
Yes, we do.
Issue.
Yes.
I think it's an issue, but
yes, which obviously we would have a robust discussion on about whether that's an issue. But you know, obviously low interest rates are fueling activity. But the other thing that's fueling activity in the marketplace as well is the fact that over the last 5 to 10 years, most of us have acquired a lot of equity in our properties because of natural capital gain, and we're using it.
Well, if you'd have listened to the people talking about the bubble, when Peter Switzer was here earlier on, and he and I have spoken about this on his show every year for the last 5 years, the bubble, and everybody talks about the bubble. And if you had have listened to some of the spruikers coming out of mostly the US, and I know some people had actually sold their properties 3 or 4 years ago because they thought the bubble was coming, and they missed out on an enormous capital gain.
It's really frustrating from a person who watches the property market. We really live in it. Property and finance is something that we do every day of our lives, but we see ill-informed people talking about the Australian property market as one market. It's not. It's a number of markets, and they perform a whole lot differently to each other. And, you know, so it is concerning. It's a longer discussion, and hopefully when we come back after the break, maybe we'll talk about it a little bit more. Well, there's still time for you to ask your question this evening, and we have wonderful people to answer it. So you can also win a copy of Margaret's book. If you would like to join in on the conversation, pick up that phone and call us on 1300 30 34 35, or send us a question at property@skynews.com.au. It's time for another short break. We'll be back in just a moment. Welcome back to Your Money, Your Call. I'm Lisa Montgomery, and doing a sterling job this evening is Charles Tarbey from Century 21 Real Estate and Irene Riddel from BMT. And if you would like our help this evening, simply call us on 1300 30 34 35 or email us at property@skynews.com.au. Well, before we went to the break, we were talking about the bubble, and we were talking about the fact that, you know, there are different markets performing differently across Australia, and we could talk about that for a long time. But one of the things that I think is really prudent to talk about is interest rates and the cyclical nature of them. And if we look back to October 2011, before interest rates started to go on this downward cycle, people were paying, and I've got my numbers here, $640 more on a $500,000 loan than they are today, and $890 more on a $700,000 loan than they are today, because interest rates have decreased 2.25%. About 2% of that was passed on to borrowers, but indeed a bit more if you took one of those very low fixed rates in recent times. So I think we need to be pragmatic, don't we, Irene, about the fact that interest rates are cyclical and we need to prepare, don't we?
Exactly, that's right. I mean, when the rates are low like this, it does bring you forward to think about, well, should I be taking advantage of this?
Yes.
Where am I going to be in 3, 5, 10 years later down the track? I obviously wouldn't suggest anyone to fix for an extremely long period of time, because you simply don't know what will happen. We can only speculate. But, you know, it does bring one to think, oh, well, is this something that I should be doing now? And I mean, if people do tend to just hold their horses, they wait a little bit, and then in time they might find that they've actually lost out on what's happening now. But it's so true. It is cyclical. It will go through a cycle. You know, for how many years? You said back in 2011, it was already such a big difference, and that was only about 3 years ago now.
That's right. Well, we didn't get to it at the outset because of some technical problems, but one of the things I was going to talk to in my opening story was the fact that the finder.com.au survey was looking at at their 28 economists were saying that a new normal of around 4% would be what we'd be seeing in interest rate land, rather than 2.5 than what we're sitting at the moment. Charles, what are your thoughts about where you think rates might go if they return to a normal level?
Yeah. I think we've all been wrong, because last year we were talking about them probably rising about now. So it just keeps going on, and I think they should be a little higher. I wasn't happy when they came under 3%. I understood why, but I just really wasn't happy about it. I thought 3% was a good area. If you go back to the old days of lending, you had a multiple of around 27% of gross income for both parties was the amount of money that you'd allow for a repayment. I think it was about 27%. And I think we're back around that right now. So we're actually back into the phase we used to be in. So who knows what might happen. And there's also competition. Rates might go up. There's also competition from second-tier lenders who are bringing their interest or their margins down to compete. So there could be a double.
Well, it's interesting. We have seen some huge discounts in the fixed-rate marketplace in that 1, 3 and 5 year fixed-term periods. But I did predict a few months ago that we would see some reductions in the standard variable rates, and we have. And we've seen that from some of the smaller lenders and some of the online lenders. But we're also now, as you said, starting to see that from the second tier. People like Suncorp and some of those second tier players, which are, you know, quite, big in the marketplace. So I think we are going to see that that'll be the next band that will see some discounting in, because the competition is fierce for...
There's a lot of changes with brokers' fees. As you know, they've just increased as well in some areas. Some brokers are getting more, and they can give a reduction at their end if they want to.
That's right.
You know that better than anybody.
I do know that better than anyone, and I'm also seeing some cash back deals that are available now to borrow as well, with the National Australia Bank offering a cashback facility as well. So I think we're going to see a lot more of that competition for the Australian borrowing dollar, because of the fact that there is so much happening right now.
So use a broker. I mean, use a broker, because my brokers at Century 21 Home Loans, there's a substantial number of them out there, and they will get the better rate for you. They will find it for you. You know that. That's how it works. And
Yes.
I think the banks have really understood that now, and that's why they're increasing margins back to brokers, because the brokers can do a better deal than the cost for a bank to try and do the same thing.
Well, I think also the other point when you're using a broker or any lender is you want them to be able to give you the advice piece that you really need, and you want them to stay with you for the journey. Those people should be there giving you advice on your holistic finances rather than just on this particular deal that you're doing.
You need to get me out of this conversation. She'll beat me to death on this.
You know I will, Charles. There's no doubt about that. So it's a great segue into another email. So to another email, and it's from Mick this time, and he writes, I read on the weekend that the Reserve Bank wants to tighten their belt based on Sydney and Melbourne property price increases and the fears of another bubble burst. Here we go again. This may crucify other Australian markets like the Brisbane market, which is just starting to show positive signs of growth. How do you see the market? Now, this is an interesting question because if some measures are brought in, and Irene, we were talking about this earlier, if the RBA decide to make some changes to negative gearing or to bring in some other measure, what impact is that going to have on other markets other than the one that they're looking to correct?
Yeah, that's exactly right. So there are talks that negative gearing could potentially be done away with in the future. So it has been put forward, and I mean, negative gearing, it does affect, from a property perspective, the entire income that an owner is able to offset with their tax. So what they're talking about isn't that they would allow that to happen to people who've already gone in, made a purchase decision, and they're in a negatively geared situation.
You're saying for new
purchases, that's exactly right. So new people who are looking to get into the market to invest, those that are typically purchasing and then maybe going into an interest-only fixed loan, potentially they're the ones that may not be able to have that in a negatively geared situation, which potentially could damage the market a little bit, but then you'll still get those that are purchasing, because everyone needs homes to live in. Everyone needs somewhere to live, whether they rent or whether they purchase to invest or purchase to live themselves. So I don't think it's going to be too much of an issue, and potentially in the future they could change that back. They want to stimulate the economy again.
There is another angle though, Irene, with regards to negative gearing. Firstly, it's going to take some very brave politicians, but more importantly, if they do introduce something along those lines where it's the future buyers that won't get the negative gearing, the current buyers will keep their properties, and then all of a sudden you'll find there'll be a supply issue. Because there'll be no way they'll sell. Nobody will sell their properties, and you're going to cause another problem down the track. It works fine the way it is. So I think they should just let it go and get on with it.
It's the unintended consequences of any measures they bring in that I think we all need to be really cognizant of, because we don't want that to impact, you know, if we have an issue in Sydney and perhaps in Melbourne to a certain degree, what would these measures do more broadly? And I think that that's really the concern that we've really got to have.
There are a lot of people out there that have built their wealth off negative gearing. For them to talk about this right now is wrong.
Is wrong, I agree. Well, it's time for another short break, but there's still time for you to ask your questions. So please join in on the conversation. Call us now on 1300 30 34 35, or send us a question at property@skynews.com.au. We'll be right back. Welcome back to the property edition of Your Money, Your Call. I'm Lisa Montgomery, and with me in the studio is Charles Tarbey from Century 21 Real Estate and Irene Riddel from BMT Tax Depreciation. And we're here to answer your questions, but we're almost out of time. But if you would have called 1300 30 34 35 or emailed us at property@skynews.com.au, you could have had the opportunity to talk to us. But we are almost out of time, but we didn't quite answer that last question.
In your intro then?
Look, you were, Charles, but that's one of those things that we deal with. It's all good.
Just a last quick response to whether or not, if the Reserve Bank applies LVRs like they did in New Zealand on first home buyers, will it impact the markets? People need to know that Sydney has always been higher than Brisbane, and it's only just starting to reach the point now where you can sell a property in Sydney and buy in Brisbane and get a good property like you used to and still have cash left over. So I don't think there's an issue. I really don't.
But you don't think there's an issue?
No, I don't.
Do you believe there is one, Irene?
Oh, look, with speculation, I don't have a crystal ball to predict the future, But I think that with Brisbane moving how it is at the moment, a lot of people have got interest in there as well.
Yeah.
And, you know, with people who are looking to invest, it is a very good area. And as you said, lots of apartments coming up there. And so I don't think it is too much of a concern, but definitely as soon as the market changes, and as you mentioned, there's different markets in different areas.
Yeah.
So overall, Sydney has its own market and Brisbane has its own market as well. They may be affected altogether by what the RBA puts down the rate will be, but I do think people will still invest. People will still be wanting to invest in Brisbane.
Well, I think that we will have to wait. I mean, the RBA are saying that they're going to be doing something. They're actually talking about this now before Christmas. So I think we will all be waiting with bated breath to see what measures they bring in. Let's hope it's not macro-prudential measures, because I think that will really kill the first home buyers. And if it's something to do with negative gearing, well, then we're all going to have to deal with the consequences there. So that's all we have time for this evening. And before I do go to the winner of the book, I want to say, Irene, you've done an absolute amazing job this evening for your first foray into Your Money, Your Call. Now, the winner of Margaret's latest book, How to Achieve Property Success, is Vicky number 1. I think we've decided. Now, she was calling up about Coffs Harbour and Deception Bay. Now, Vicky, what you need to do is to email me at lisa.montgomery@tpg.com.au. That's lisa.montgomery@tpg.com.au, and I will arrange for that book to be sent to you. Thank you so much for your questions this evening, and thanks also to my wonderful guest, Charles Tarbey from Century 21, who's always entertaining when he's on the program, and of course Irene Riddel from BMT Tax Depreciation. We'll have you back any day, Irene. Thank you so much. Before we go, for all our Sydney viewers, I'll be speaking at the Vitality Show at 4:30 p.m. this Friday. Now, that show opens at the Royal Hall of Industries and Hordern Pavilion from Friday the 10th to Sunday the 12th of October. That's this weekend coming. You can get your tickets from the website. That's www.vitalityshow.com.au, and there are some amazing speakers, including myself, so make sure that you get there. You can also follow me on Twitter at Lisa Knows Money. That's all one word, Lisa Knows Money. I hope to see you at the Vitality Show, and Margaret should be back next week in this chair, so make sure that you tune in. I'm Lisa Montgomery. Enjoy your week.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.